Good evening, everyone, and thank you all for being here. I'm Jay Wax, and a longtime volunteer for the Cornell Annual Fund, ILR 1968, Law 1971. I'm very proud of this badge because it says Law 2000, and one of my fellow classmates is here this evening. And longtime, as I said, longtime volunteer, but I'm proudest of all being an ILR parent. Professor Louis Hyman, director of the Institute of Workplace Studies, created this terrific Future of Work program that this lecture tonight is only a small part of. So now please welcome one of my favorite ILR academics, Louis Hyman. Louis?
Well, thank you so much for joining us today, whether you're in person with us in our new space or whether you're online. Thank you, Jay, for that loving introduction, and go class of OO. So often when we talk about the future of work, we think about work, which makes sense. But tonight we're going to hear about the relationship between personal finance and work, which is just as important because, after all, we have to retire someday, hopefully. We have to pay our bills. And this is what we're going to learn about today. Now, I want to apologize in advance. If you were at Davos, you already heard this talk. For those of you who didn't manage to get to Davos, you're in for a treat. Tonight we have with us Usman Ahmed. He is the head of global public policy at PayPal. His work covers a variety of issues, including financial services regulation, innovation, international trade, and entrepreneurship. Ahmed is also an adjunct professor of law at Georgetown University Law School, where he teaches courses on international law and policy issues related to the internet, as well as fintech law. It turns out, in fact, that regulation still matters in the era of the internet. His research has been published in the MIT Press Innovations Journal, Cambridge Press World Trade Review, and the World Economic Forum Global Information Technology Report. Ahmed earned his JD from the University of Michigan, his MA from Georgetown, and his BA from the University of Maryland. And please give him a lovely Cornell welcome.
And thank you so much, Louis. And this is an incredible space that you guys have set up. It's really wonderful to be here. And I have a couple of good friends who are Cornell alums, and the kind of, passion, I guess, for lack of a better word, is impressive of Cornell alums. So happy to be here, happy to christen this new space. I heard I'm the first kind of talk that you guys have had here, so really appreciate the opportunity. And as Louis mentioned, at PayPal, financial technology company, we have 20,000 or so employees, so we certainly think about work and kind of what's happening with our employees. We also, and kind of the impetus for this project, maybe some of you are PayPal users, you probably bought some stuff online, but, and we have like 240-ish million people who buy stuff with us, but we also have 21 million people who earn a living using PayPal. So when you're buying stuff from people, sometimes they're also using PayPal to manage their business, manage their financial life. And as work is changing, actually, and more people are kind of using the internet in a way to either earn their primary source of income or supplement their income, kind of we're starting to see more and more of this world of work kind of enter our space. So, not only the consumer financial services and management, but also the way in which people are earning an income is increasingly kind of flowing into our world. So that was the background for why we got interested in this issue. And my job, on top of kind of dealing with regulations and policy around the world, is to try to do research to understand some of these bigger, broader trends, both for our company and for the ecosystem, because we have a lot of data and a pretty interesting perspective, I think, that we can offer out to the ecosystem, because these problems are way beyond, like, PayPal is not going to solve the problem of the future of work. It's a huge problem. We can maybe help solve bits and pieces of it, but unless everybody in the ecosystem is working together, it's not going to get solved. So what we did here, in kind of a more academic fashion, I guess, is we did a survey of 8,000 workers in 8 different markets, and we kind of looked at people who were in the prime working age, so like 20 to 50. We got a mix of industrial markets and emerging markets, the big ones in China, Brazil, and India. And then we did 120 or so, actually, expert interviews. And Louis, you involved in that, and we spoke about your perspective and the excellent book, Temp, that you wrote, which I finished on Audible earlier this week. It was very, very, very informative. Thank you.
And long.
I mean, I breezed through it.
Oh, good.
So we did 100 expert interviews with, again, people from about 30 different countries. So really wanted to get a global perspective on this. I think we often talk about the future of work very much as a U.S. phenomenon, and I'll circle back to that at the very end. There's actually some super interesting learnings for the U.S. from other countries and vice versa. And then again, as I mentioned, with 230-ish million people managing their financial life on our platform and 21 million plus who are earning an income, we have quite a bit of data that we could bring to bear on this particular question as well. And with all of that work of months and months of digging into this issue, and there's so much kind of discussion around this issue, and it's, the robots are going to take all our jobs, everybody's going to be driving an Uber car, or there's all these just, high-level statements that get put out there. And you would think, again, as a company trying to sell stuff, we would have something very blustery to say, I guess, but our real conclusion was pretty muted in the sense of our only kind of cross-cutting conclusion that we could give was that the traditional 9 to 5 that all of us have kind of, or many of us, I guess, have kind of grown up with, and the idea of a single job for life, those are likely to become less likely. That's kind of the, less common. That's kind of the only thing that we could say with some level of certainty, that across all the many experts that we talked to and the data that we got back, many, kind of bits and pieces you can pull out of that. But that was one kind of overarching thing that we thought we could say at the start as a kind of overarching trend. So within all of that data and looking at all of these issues, we thought we would divide it up in a way that would make some sense. So we divided into 4 different trends that we think are driving the future of work. And these are issues that I'm sure have been talked about here and get talked about a lot. The first one, the kind of headline thing that often gets talked about, is automation, right? The robots are going to come and take everybody's job. And so again, if you've seen actually last week, I believe the OECD put out new numbers saying that in the next 20 years, 50% of jobs could be eliminated due to automation. A couple of years ago, they started at some academics at Oxford using OECD data, said it was 42%. Then the OECD said it was 13%. So, who knows, obviously, it's something very difficult to understand. But what we were able to do with what the OECD's research has done is break people down into categories of work. And there are some that are obviously much more likely to be impacted by automation than others. And so because we were surveying people, understanding what they do for a living and categorizing them in that way, and again, because we were looking at the personal financial management of these people, we were able to kind of put out some pretty unique insights about what's happening to people who happen to be in those spaces that are likely to be impacted by automation. And it's, when we talk about some of the big policy issues in this space, like universal basic income or portable benefits, this kind of finding about the financial lives of these people, I think, is pretty important to consider. So what we found was that over 75% of the workers who were in these spaces or these job types that are likely to be automated, they had no idea. They had no idea this is going to be happening. They think that their income is going to be going up. They're generally positive on the future. So they're kind of, hopelessly unaware that this is kind of change is impending and is happening to them. And that's reflected, again, in their financial behavior in terms of saving, preparing. So the average kind of retraining program, at least among large companies, takes about 6 months. That's also the amount of time that unemployment benefits occur in many states if you lose your job and you would need to get retraining. And so what we did was we asked people, okay, how many of you actually have money saved up for 6 months in case that happens? I remember I was on a panel with a nonprofit that's doing a lot of incredible work in this space, and the founder of that nonprofit told this great story about his father in the 70s who was a janitor and who retrained to become a COBOL engineer, right? And I asked him in front of this huge audience, I was like, where did he get the money to do that? You have to be able to pay for an education. And he said, oh yeah, we were able to get a loan. And post-financial crisis, kind of difficult as a janitor to go in and get a loan for education, I would think. So what we found was that only 38% of the workers, again, in these spaces that are highly likely to be automated, have that 6 months of savings. So would be able to take on the burden of either losing a job or going into a retraining program where they're not earning the same amount of income and taking that on. So again, when you're thinking about some of the bigger, broader policy issues, understanding that these people are often in the most precarious situation, the ones that are most likely to be impacted by this change in the way people are working are actually in the most precarious financial situation. So treating everybody as equal and kind of applying these policy solutions at an equivalent level might not work. It might need to be that we understand actually who these people are, their situations, and the impact that technology could have on their future. The other area that I guess gets so much buzz in this space is obviously kind of gig work and the platforms and all of these, I'm doing side hustle and I've got a gig job, and all these terms are obviously becoming kind of part of the common nomenclature now. And what we did was looked in a kind of, as unbiased of a fashion as we could at these workers, because I think the sentiment is, and actually the Department of Labor had a finding earlier this week that these are not like employees, they're independent contractors, they're doing stuff on the side. And so the traditional understanding of independent workers, and our research proved this too, because we asked about independent workers, is they have pretty precarious financial lives. Bills tend to be very kind of standard, every 2 weeks, every month, your food bills, your family bills, education bills, rent, obviously. These things are pretty kind of standard. And so when you're earning independent income that fluctuates, it becomes pretty difficult to manage those bills. So the sentiment about these online platform workers is, they're going to be in a really bad financial situation because of that, because they should map up to independent workers. And what we found in our research was independent workers who responded to our survey, they did kind of fit that pattern. They really struggled with their financial lives. They did not have good savings. They struggled with bills. They didn't have positive feelings about their future financially. But platform workers actually were positive. They actually exhibited more positive behavior than we were expecting. But they do have some unique challenges because, again, their income is not the standard income that many of us in this room probably have. Every 2 weeks you get your paycheck. You might have some 401k savings. You might have stock, whatever. Most of these guys do not have that situation. And so what we found was, first of all, this space is growing massively, and a lot of these platforms actually use PayPal, so we were able to see the growth pattern of a lot of the Ubers and the Airbnbs and all these other gig platforms, and they're growing almost 50% year over year consistently. So this is a massively growing space, which I think is everybody understands. Secondly, that these people actually exhibited a fairly financially healthy set of behaviors in terms of they said we have a decent amount of savings. We're earning more money, and that was surprising to us because we thought they would reflect the independent worker, and we asked people who are independent who are not online platform, and they were struggling. And so our hope on this, right, is that this kind of economy is different and does have meaningful differences. But our concern is that because we're in this early stage of growth of these platforms, people are earning a lot of money and they're happy. But what happens, once it hits full scale, or the demand goes down, then all of a sudden maybe the earnings will really start to reflect more what the independent work economy looks like. And again, these people will reflect a lot more like the typical independent worker. That's a serious concern. And one of the concerns, even with these people who are earning more money, doing more savings, is again, the income does not match the expenses. So 63% of workers who are in the platform economy, this is another point. What we found was that it was about 44% of workers in the platform economy who were saying we still struggle with bill payment on time because they're not earning the consistent income. This last point is just demonstrating that they part of that is they want to receive their money instantly. As soon as they do the job, they want the money so that then they can pay the bill. If I work, a full day and then I don't work for another couple of days and I have to wait for that income to come to me, that could be, the difference between being late on rent or not. So huge kind of demand for that service, and we see that on our platform. Again, technology gets a lot of the hype in the discussion around the future of work, but there are other changes that are going to impact how we work. And we also decided to look into socio-demographic changes, related to gender or age or where people live, as we were talking about urbanization. We also looked into that set of issues when we were thinking about what's going to be happening to the way in which people work in the future. And so, again, on the age side, I said we kind of, classify people as 20 to 50. So we got millennials and we got Gen X. And one of the most interesting findings about the millennials was, many things came up. Was that they are much more likely to work 2 jobs. So they're much more comfortable with this whole gig economy idea that I'm going to have a little side hustle. I'm earning multiple streams of income. Again, because these platforms are growing, this is just a great way to earn more income. What happens in the future with that? Secondly, that they want everything instantly. They want it digitally. That kind of trend came up a lot with millennial respondents to our survey, that they want these jobs to be presented instantly. They want the money to be, inserted in their account instantly, and then they want to be able to enjoy that or use that money instantly. Similarly, one of the big trends going on in the workplace is kind of in many countries around the world, especially in emerging markets, huge trend of more and more women entering the workforce, really for the first time. And what we found was that women respondents to the survey were a little bit more financially stressed. And I think that makes sense in many cases, particularly when we looked at the US. I mean, the numbers of single family households that women are holding up by themselves, very, very challenging situation from a financial management perspective. And also this trend, all these trends on age and gender also kind of further the notion that people want more flexibility in work. And that's why you're seeing these more side hustles. I want another job, because if I'm the only person taking care of this child, I need a little bit of flexibility if the kid's sick, or if I have to go to the school or whatever. So this notion of there are unique financial challenges to being a working woman, in particular if you're a single parent, and that reflected in the responses to the survey that these folks are not feeling as confident across the board, whether they were in platform work or in a more traditional job. Lastly, one of the trends we looked into was kind of urbanization. Another big trend that's occurring, I think, a couple of years ago was the first time in the world where more people lived in cities than in non-cities, I guess, suburbs or rural areas. And that trend just continues. It's really become incredible growth rate over the last 30, 40 years. You, as a historian, would probably know this far better than me. And so what we found was that, part of the urbanization trend is that jobs are less available in rural areas. And so financial kind of precariousness is increased, and that's what we found in our survey. I'm having a lot of trouble with this thing. 14% of rural respondents said that they felt like they were going to be able to retire, to your point, at the age that they want. Now, granted, nobody to this survey said, I feel super comfortable. They're like 20, 25, 30. I don't feel super comfortable that I'm going to be able to retire. But it's a step order difference from people who are in urban areas, right? 25% almost are saying, I have some level of comfort, whereas only 14% of these rural respondents were saying, we're comfortable that we're going to be able to retire on our own terms. So pretty stark difference there. So the last trend that we looked at was, if this notion that we looked at the beginning, or this kind of high-level statement that we put out that the traditional job, for life is going to be less likely, and there's going to be more precariousness, more, churn in jobs, then maybe entrepreneurship becomes a more likely path. And again, with PayPal, 21 million of these guys, we have a little bit of a sense of what's going on in this space. But what we didn't realize was all the financial challenges that entrepreneurs face. And again, the survey kind of reflects that. So only 46% of the small business owners that responded to our survey said they make a consistent income. Again, if you make a 2-weekly check, that's very unlikely for a small business owner. And what that means is that 55% of them, higher than any other cohort that we studied, said that they had paid a bill late in the last 12 months. And so obviously that's additional fees, and that's interest building up, and all all sorts of challenges that these guys have. And so, again, not surprisingly, that similar to the platform economy workers, these guys want their money instantly. They want to be able to leverage that for credit if they need it. They would love to get, early earnings on their income. So all of these kinds of financial solutions that are still not really yet widely in the field probably need to be created. And this whole study was in part directed at the financial services industry. I have to give a presentation on this to a bunch of large employers in a couple of weeks in Arizona. And the organizer, we were having a call earlier today, and she was saying, you directed this whole study at the financial services industry, telling them that they really need to shape up. What do you have to say to employers? Because these are going to be all the employers in the room. And I said, the employers need to demand the financial services industry actually creates these products to meet the needs of their employees. Obviously, there are other things that employers need to do around portable benefits and all these other areas. But in terms of financial services, it's going to be the actual financial institutions, the fintech companies. They're going to be the ones that need to create these solutions because people are starting to move into these very precarious financial situations. The last cool thing that we did was we did this little kind of regression analysis. We looked at like a kind of a job type and a person who's highly, who's kind of like the ideal person you would want to be in the future. So we got Sam over here, and she's a physical therapist. Care is one of the industries that's highly unlikely to be automated, challenging to do from a platform perspective. People want the same person taking care of them. So we kind of picked somebody, and we created this profile of somebody who would be, unlikely to be affected by a lot of these different trends. And then we ran a bunch of regressions to see, okay, what happens to their financial life if we change their job type a little bit, right? So if they were in a profession that was highly likely to be automated and they got fired, what happens to them? And what we found was that, again, they were highly unlikely to have the savings to be able to take that on, vis-a-vis a physical therapist who might be saving more money and being able to take on that kind of, issue. Similarly, if we looked at somebody who instead was in the platform economy and was, using these mobile devices and kind of accessing all their money online instead of in a more traditional way, again, bill payments going late was a huge problem for these people. It was 20 to 30% more likely that they were going to be paying bills late. So, have a chance to, if you ever have a chance and you want to Google financial health for the future of work, you'll find all the crazy regressions that we did and analysis, but just a little bit of a sense of, I think we think of this kind of traditional, and again, that's one of the things I'm going to say to all these employers is, it's great, you guys are doing this work, you're thinking about how to do 401ks for other people, you're thinking about retirement benefits for your employees. Something like, I'm still putting together the numbers, but I think it's somewhat fair to say that about 50% of Americans who are in the private sector are not in those type of jobs, right? They're small business owners, they're employed by a small business that doesn't have these kinds of protections in place, they're independent workers, and this segment does not have all of these employer benefit creation, tools at their disposal. So they're in really challenging situations, and they're going to need solutions that can be delivered at scale because their segment seems to be growing in the economy. And maybe there's something employers could do for that too. I mean, they don't have to just help their employees. They can actually help to solve some of these problems as well. The last thing I'll just say, and then I'd love to just have a conversation, is I mentioned that this study was global, and I mentioned that there's certain interesting things that we in the US could learn from emerging markets and the rest of the world. And talking to government officials in India and in China, talking to academics, it was funny, this notion that there's going to be this more precariousness in work, and people are going to have many jobs over the course of their lives, and many at the same time. They were like, yeah, we've had that forever. That's been emerging markets. That's how it always is. Yeah. And they were actually saying, oh, what's interesting is we're moving more towards people having middle class jobs and kind of standard jobs. So it was interesting, this kind of convergence that's going on in the world where, so again, we were very much thinking of it from a financial services perspective, solutions that exist in the emerging markets, things like saving circles, things like, communities building credit solutions for one another, things like being able to, call on family members to get money when you need it. Those might be things that we need to start figuring out how to do here in industrial markets if these trends are going to continue. Probably not the ideal solution, and this whole notion was not to say we don't need government solutions and we don't need employer-led solutions. The notion was to say we also need these solutions. We also need to be thinking about some of these issues, because if some of those big, broad policy solutions aren't in place, these trends are just going to be even more challenging. And the people who are, again, in the most precarious situations are going to be the ones that are hit the hardest by it. So thanks again for kind of offering the opportunity to come and talk about this. It's something we're really trying to figure out at PayPal. If there's folks in the audience who are either working for employers who are thinking about this or working in a space where you're thinking about this, like, we'd love to figure out how to partner with you or help to deliver some of these solutions to the people who need them.
Well, thank you so much, Usman. I think that was just a wonderful talk. And one of the things I think is so important about this work is that it highlights the importance of income volatility. We talk so much about income inequality. We talk much less about income volatility, which has very real costs. And I think it's costs that are hidden from lots of well-meaning people who live in this salaried world, the actual financial lives of just average Americans. That there was that JP Morgan Chase study a few years ago, right, that found that, what was it?
No, it was a Federal Reserve study. 47% of Americans can't cover a $400 expense. Is that what you're referring to?
I think we're going to study off each other
Okay.
right now.
Study off.
Yeah,
Let's
so
do a study
that's
off.
really important, that 47%
Sorry.
don't have $400.
Sorry.
So just think about that if your car breaks or you
Health
need
issue.
Health issues, right? This is why medical debt can so easily
Spin out of control.
get out of control. But there's another, it's interesting because you guys relied on some administrative data, internal private data. JP Morgan Chase did the same thing, and they found that a little over half of average median household income, families with median income, had month-to-month fluctuations,
In their income.
had
That's
of 30% of their income every month. Just try to imagine paying your mortgage or budgeting or all the things that scolds like to tell people. Oh, why don't you just figure it out?
Right.
It's like, well,
How do I do that?
with a shift job? I get paid different at the restaurant every week. So I think this is one of the
I'm
big.
working on tips, right?
I'm working on tips.
So what do I do?
I don't get the shift I need at the Starbucks. So I think this is something that really needs to be talked more about, and I'm really glad that you are doing that.
No, that is certainly one of the major trends that we focused in on. And it's actually, again, sorry to continue to take a global perspective, but I just think it's so interesting. You've got a country like Singapore, and we talked to the head of workforce development in Singapore, and they have this kind of very traditional mindset of everybody works these 9-to-5 kind of jobs, right? And now they're seeing this influx of people getting more infrequent work, and they're saying, how do we manage this? Like, how do we actually help people think through this? They're very much a government-driven society, and they want to figure out how to help these people. But they're seeing this trend is growing rapidly, and people have unique issues when they're in these situations. So it's a global trend. It's something that I think everyone is really trying to get a grasp on, because and again, the struggle is we have this mindset of, oh, I earn my biweekly check, and that's how I get my credit score, and that's how I, pay for my retirement, and that's how I, manage everything. And that's just, you wrote a book on it. It's kind of, it's happening. It's a challenge.
But I think it's also just we think of that as normal, and maybe we're like, oh, well, we know people drive for Uber. We know there's the gig economy. But we don't think of the downstream consequences of that for our financial lives that have real costs.
Yeah, and look, again, 50% have fluctuations in their income. Almost 50% can't cover a $400 income. So that's a lot of people. That's not just some small number of people that are driving for whatever company, right? That's a very significant percentage of our society.
So let's take some questions from the audience rather than you and I can chat all day.
Two technical comments.
If you don't mind using the microphone for the people
Two
online.
technical comments and then the question. First, on the technical thing that you talked about the 401ks, I think with SEPs and IRAs, it's essentially we have some great minds as policymakers from time to time in our country, and they thought through these things, and I think it's pretty across the board for all the different possibilities that's that's present. The second technical comment is several thousand years ago, this problem was addressed in the Torah story about Joseph and the silos, and so this is not a new problem. This is something that we've had droughts that destroyed civilizations, and the problem of having irrigation and doing things to try and average things out over time has been something that pharaohs were dealing with thousands of years ago, and everybody else is downstream. The question that I have, which I think is the interesting part as it gathers steam, becomes not just a little niche area, but becomes more central to the macro situation, is the question of you identified some of the major touchstones of civilization in the last 40 years. But one of the others is the fact that there's been this income decline for vast stretches or lack of rise the way we had through the 50s and 60s. And I think that's the other piece of the urbanization and the other major 30,000-foot changes that have affected civilization. And the question that I have is from a macro and policy point of view, did you, in your research, find anything as to whether these different non-9-to-5 setups are more likely to break that problem, if you will, of lack of wage growth? And, it's been a political issue for at least the last 12 years. And so it's a major piece of the entire fabric of GDP and where our civilization is. So the question is, did you find anything as to whether it's going to continue be the same or be more extreme because of the volatility or what have you, or whether this may be part of a solution to that problem of allowing to a wage growth to accrue where it has not because of international pressures over the last 30 or so years?
Great, thank you for the question. And certainly, you did the multi-thousand-year historical view of this being the reality, and I was saying even in our current times, many emerging markets live in this reality right now, and so it's exactly the same notion. And then, of course, thank you for highlighting the multitude of retirement products that exist. The challenge is, again, not only that people don't use them, but also that they're not really, let's say, when you probably read a lot about retirement, considering what you just said. The change in the 401k to make it opt out instead of opt in was huge in terms of uptake of it. And so, designing products in a way that people will actually use them is part of the problem with the whole retirement area. Lastly, to your last point about kind of income inequality, if I could just simplify it in that way, we didn't ask people how much they earn, so we couldn't really say if they were earning more or less. Again, because we were mostly focused on the consumer financial services line. But one of the points that I did raise that I think speaks a little bit to that is the notion that independent workers were far more financially precarious situation than kind of traditional workers, right? And so that indicates that they have struggles, I would say, both with income volatility and probably with not enough income. Mm-hmm. But then I said on the platform side, you actually saw that they were exhibiting pretty healthy financial behavior. So that could indicate, because they're still kind of in a volatile situation, that they're probably earning more income. So that's probably why they're able to handle some of these financial situations better. Again, my concern is that at some point, these two worlds will start to equalize, right? Because the market will build out. So as this market is growing in a very 50% year over year fashion, you're seeing these people, and I think many people are saying, I do it because I want to earn more income and I want to supplement my income, or I earn, I was reading a fascinating study about China and the sharing economy, where there are millions of people who are, it's a huge issue in China right now, leaving traditional jobs to go drive for Didi or to deliver food for Alipay or Alibaba because they earn more. Actually, those articles say we earn more doing this job than doing the traditional job. So that does exist. Unfortunately, we didn't ask about how much income they're earning, so I probably can't answer that question as precisely as you might like.
An opportunity for more research.
Absolutely.
That's right.
Always a good.
Hi. You said that your studies were global. Mm-hmm. This is kind of a two-part question. The first part is, in your research, what can we learn in the US from some of the other economies that you've done your research in? And then second part is, as individuals, what are the things that you think we can do to prepare ourselves for the future of work?
Great. Yeah, I gave a presentation on this thing, this whole study at PayPal, actually, to a big group of employees. And the first question back was from a pretty senior leader, was like, is my job going to be gone in the future? Like, that was his initial question, so I appreciate your second question. So let me speak to the first question. I mentioned a few things, some like pretty, I think, innovative products that we don't really have in industrial markets, things like saving circles, that probably could be created through technology in a pretty cool and innovative way. One other high-level thing that then relates to a bunch of different product sets would be basically the notion of creating much smaller, more targeted products, right? So right now, if you think about most financial services, they're like a box. You go in that and you get it, and it usually lasts for a long time, and then at the end of it, you're done with it. And we heard this incredible story about Heinz ketchup in Uganda, and Heinz ketchup really struggled in Uganda and lost to a local startup because the local startup was offering individual packets of ketchup versus the giant bottle, right? And so that same notion of like, can you create really small targeted credit products instead of one that's like 5 years long, right? And it's kind of standard issue, and it doesn't matter who you are, you're getting this product. Instead, understand that people need maybe something a little smaller, more targeted, and that is much more manageable, and they can actually use that and then move on from that. So, a little bit high level, but I think it goes to a number of the different product areas of really, again, leveraging technology to understand the individual, their needs, and what you can actually do for them. And then on your second question, I mean, we didn't really do a study about kind of like training and what we can be doing as workers. So most of our stuff had to do with financial services. So I don't know if you want to speak about what you've seen, and you didn't really write about that either. But I think all of this research is just demonstrating, and I guess our one high-level statement is that there's more uncertainty coming. Back to your point, sir, like, for the vast majority of human history, it's been like that. And we kind of had this amazing window, and you would be able to speak much better on this as a historian, right? From the post-World War to the recent, to the financial crisis, right? Where you had a huge middle class that kind of had these, pretty well-paying jobs, and, you had income growing right alongside, and that became like an economic law. Oh, like income should like grow right alongside.
We don't need to worry about this. This is how capitalism is for the rest of time.
Right, yeah. And maybe those notions just weren't accurate, right?
They were not, in fact. Yeah. So. I mean, certainly at Cornell, like I'm on the curriculum committee, and we were talking about what should we teach our students. And this is one of the big questions. And the phrase I kept coming back to again and again was, we need to teach them to learn how to learn. How to be curious, how to be more human. Because if you learn something today, it won't really matter in a couple of years. But this ability to read a hard book, to learn a new skill, that's something you're going to need to do again and again, as we all have as in our lives, right? And I think that's, for me, this is the great opportunity that, lots of things are going to be automated, but it's not stuff you want to do. And in fact, no human should do. Humans should be caring for other people. Humans should be doing curious work and creative work. And just in the same way that so few of us brought in the harvest this fall. I mean, I don't know, man, did you bring in the harvest?
I did not bring in the harvest.
Yeah, none of us did, right? And yet we all eat bread, right? And when we're not on our diets, right? But this is an important part of the progress, and alongside that is this terrifying possibility that it's a race to the bottom. And so that's kind of a choice that we're in, and it's not determined by technology. It's determined by the political choices that we make as a society about what we value, and whether we value people as humans or just value people as a disposable labor force. And I think that's the political question of the 21st century.
Yeah, and I guess one trend that we did highlight in our report that we think is potentially more likely in this world is kind of entrepreneurship. And I don't mean that as like set up a giant business. I just mean like you take control of your income earning life. And so, that that could be a trend that could potentially grow.
How do we
and
set people up to do that?
to-
Which is
to
a
be successful
deeply
in that.
conservative American value, right? So this isn't just a left-wing issue. This is like, how do we create that American autonomy and self-reliance that we've talked about for a long time, but we really didn't have in the post-war. That was sort of the death knell of small business. So I think there's a real opportunity here for a bipartisan conversation about how we grow this economy together.
I live and work in D.C. It's very tough to have a bipartisan conversation.
That's true. I live in New York. We just talk to ourselves.
Yeah.
Wherever the microphone is.
Good evening. My question is a PayPal-focused question. I learned something about PayPal and perhaps learned something about your platform and business model, and it was happenstantial. In January, I'd made a purchase. I moved and changed my telephone number. Forgot all about it. Ultimately, PayPal chased me down weeks ago. Paid it, forgot about it, and then it occurred to me that I should call back and ask whether this 120-day lateness is going to be reported to the three bureaus. And so I suppose, now having seen your presentation, baked into your business model is not reporting to the three bureaus based on the nature of the kinds of customers that you have. I learned something.
Yeah, I mean, a bit of a complex question because I'm not sure if I fully understand the transaction that you dealt with. Was it a credit transaction or just? Yeah, so, right, on consumer side. I mean, yeah, so if you paid it off late, right, then you didn't get reported. But if you didn't and you went into collection and all of that, the consumer side credit product does actually deal with the bureaus. So that we secure a lot of data from the bureaus to underwrite people, and so we're actually decently involved. And pretty much, we don't need to get into a big conversation about PayPal, but pretty much everything we do is kind of linked into the banking ecosystem. So, but yeah.
We'll let Sarah decide. Yeah.
Full disclosure, I work for a bank. I think one of the things that addresses the two things you mentioned is there's a terrible lack of education in terms of finance and future across the board, and especially on the lower ends of the economic spectrum, that leads to a lot of very expensive mistakes. Yep. And talking about the credit bureaus and fines and people getting these death spirals with, payday lenders and all that.
Sure.
So I think part of the problem is there's a lack of education. It's getting better with technology and it's out there, people can find it, but people still, unfortunately, get terribly taken advantage of. And the second point was, which I'm trying to remember right now, was education and lending. There was the problem also differential between Gen X and the greatest generation is the lack of pensions going forward from corporates. And that really has changed the retirement landscape for generations going forward. Because if you put, your $18,500 into your 401k every year, that's great, but that's not enough. And people don't understand that. So I think that's another thing people realize is the safety net that was there from pensions in the past for your parents and your grandparents doesn't exist unless you're a fireman, policeman, or teacher. So I think again, the lack of education to help with the foundation to kind of get people more stable ground is to realize you can't do this, you need to budget. And there's some great companies out there that are trying to help people, but the schools aren't doing enough from grade school through college to say, like, you know what, you're going to be an adult soon. You need to learn this. So.
No, you hit a very important point there, because one of the most interesting things I mentioned, we talked to about 120 experts, and I would say they divided up pretty equally between future of work experts like yourselves and financial services experts, because we really wanted to talk to a lot of them. And actually, one of the most interesting things, whenever we ask the future of work experts, what do you need to do about financial services in this space? They would say, just educate people. Like, the problem is people aren't educated, and if we educated them, they would kind of figure this out. And when we talk to financial services people, almost uniformly, they said, that doesn't work.
Yeah.
And you highlighted the one place where some research has shown it does, which is very early age. But post that, it's very challenging to find the right way to educate people about these issues. What has been shown to be more effective on the financial services front is, like I mentioned with 401ks, designing a product where it's either opt in or opt out, or designing a product where the default is something that, or designing a product that actually can use the data to understand you better to deliver something that actually makes sense for you. Those are shown to actually lead to a lot more financially healthy behaviors than educating, particularly in older age. You're absolutely right that in younger age populations, there's been a lot of good research to show that if you can kind of get that in early, you can actually lead to a much more financially healthy life. But it's something I want to dispel for a lot of folks who are not in financial services, that like the big solution is if we just educated everybody above 30 who's poor, like, oh, they would figure out how to do this. The thing is you mentioned income volatility. I mean, if you have a 40, 50% swing in your income for that week, like no matter how educated you are, there's pretty much nothing you can do. And unless you have access to the right kind of product at the right time, you're in a really, really bad situation. And then if your options become so limited, you don't even, it doesn't matter what you know. You really only have like one path forward to some of those entities you mentioned. I mean, the alternative to them, there are alternatives to them, but that's really bad. So, you know, I struggle, and we had this really awesome exercise at PayPal where you have to, it's called the financial exclusion exercise. So you actually turn in your cards and your bank account and all that stuff, and you have to go and do a bunch of tasks. You have to pay a bill, you have to send some money to your mom, you have to buy something, and you have to get around the city. And so anyways, I remember this, it was in January, I'm like out in the cold in DC, it's freezing. I had like 4 or 5 tasks. I had $50. First I had to cash a check, which I don't know if I do all this stuff. It takes 4 hours. I pretty much fail at most of it. I'm like out of my money by the time the exercise is done. And the big kind of takeaway to me, on top of all the fees I had to pay and the actors I had to deal with and neighborhoods I had to, kind of interact with, was I could have done everything here without leaving my desk in like 2 minutes, right? With a bank account and with technology. So it's just, it's so, I appreciate so much that you're talking about, this is a huge part of the population that we just kind of we don't live in the same places, we don't deal with the same things.
Well, they live in a very different institutional setting. So it's not simply, I think your instinct is correct. We need to educate them, but we also need to foster new institutions. So payday lenders, which are notoriously predatory, we need to support banking reform that allows banks to make microloans to different kinds of populations, which Pew Charitable Trust has been very involved with that lately.
Work.
And it's something that's important because it's not just about, there is that other hurdle where when we were in school, we all learned how to write a check and sign our names. It's very different than that, learning how to rebalance a portfolio across 8 asset classes. And the kinds of minimum knowledge for that is just terrifying, right? Which, of course, if you have a defined pension, you're not encumbered by that. So that everyone has to become an expert in finance kind of seems crazy to me as a society, yet that's what we've asked people to do. So I think figuring out institutional access to these things, part of which is digital, right? Part of which is...
I think it has to be going forward, right? So the Pew also did a study that found that 60% of unbanked people have a smartphone, right? So that's a really great way to reach some of these populations, deliver, to your point, to, the type of education that maybe they can access and understand and use. I think that's going to be key. Thank you for the question.
Yeah.
Do you foresee a day where the IRS, Department of Labor, or some other U.S. governmental organization comes to you and says, right now you're charging a payee approximately 5% to receive a PayPal remittance. We want you to charge 17.5%, and then whatever is above the 17.5%, it's your profit. So that way you look more like ADP or Paychecks or whatever. Has that question been litigated, or do you see that down the road? So in other words, a 1099 versus a W-2.
So the IRS goes to a payment provider that is being used by an employee and says, you need to basically make that person into a W-2 employee?
Well, essentially, they're not doing that with ADP.
Right.
But would they come to you or your competition, and basically they say the same thing as a policy issue. In other words, we want you to be more equated with a W-2 for our remittances rather than a 1099. So in other words, rather than depending on, let's say, a 1040, what you call it, what's an employee, the employee one, remitting 17.5%, we want you to do it just like ADP is doing it on a W-2.
There has been, in the last couple of years, legislation, both state level and federal level, about reporting 1099 transactions so that they, if they don't meet a certain threshold, you don't have to report. If they do, then you do. So you are seeing action in this space about leveraging some of the data that either a payments company or the platform that is being leveraged to access the work. But again, you've got Department of Labor earlier this week saying this is not, these are not employee-employer relationships, so they're kind of indicating from their perspective maybe you shouldn't be treating it that way. So I would be completely speculating if I said what I think is going to happen. I have no idea what's going to happen. This is a rapidly evolving space, and I think one of the again, why we did this study on the consumer financial services life is understanding the unique challenges of these people is going to be the key, rather than like trying to put them into the old buckets and saying you're this or you're that.
Early on, you mentioned universal basic income, and I was curious what your thoughts are on that and whether any data came out about that, or just sort of how you think that could play a role, and whether maybe it should play a role in this landscape that you've described, and to help people deal with some of these challenges and the volatility that we're talking about.
Yeah, we didn't ask like the everyday worker that we surveyed about universal basic income. We did ask almost every expert, and I think you talk about it in your book, and welcome to talk about it here. But what I would say is across the board, we did have some experts, particularly in the technology sector, who are saying we should have something like that. Because technology is just going to change everything so massively, and we're going to be in this, very precarious world with massive income inequality, and so we should have that. I would say no other group of folks that we talked to said something along those lines. Some said no, we don't need it at all. It disincentivizes work, and then I would say a good healthy chunk in the middle said. Portable benefit, we need benefits, and we need to rethink benefits, and benefits aren't designed properly for a much more precarious world with much more job churn. One of the stats I remember to the earlier question about preparing for work is it's like, if you were born in 1950, you had 3 jobs over the course of your life, and if you're born now, the expectation is 10 plus. Yeah. So, that notion of figuring out a benefit system that makes sense for that kind of world was a big theme, but I think most of the folks did not frame it as a universal basic income in that way.
I think we have time for one more question. Does anyone else have any more over there?
Thank you. My question was really to get more of an opinion from both of you relative to this time in history. Do you believe this particular set of problems is a constructive dilemma or a destructive dilemma? And as such, if you're on the constructive side, how do you benefit from this? And if you're on the destructive side of this dilemma, how do you manage it if we can't change it?
Great question. I will turn first to the historian.
I'm an optimist. I think there can be bipartisan solutions in D.C., which is may
there can be.
It can be.
There can be.
I think there can be too. I think that this is an amazing opportunity for humans to become more human. We've seen billions of people come out of poverty globally. I think Americans often just think about ourselves, but we've seen an incredible transformation in the world in the last few decades. And we hear all these dark clouds, these scary stories, and certainly there are things to be afraid of, like climate change and things of that sort. But I do think that we are at this crossroads about what kind of society we want to be in, and I think that we can make it work if we think creatively and take advantage of the opportunities in front of us.
I work at a tech company. I'm an optimist, right? And I hope hope for a lot of positive things in the future, but I do think, and the next project that I'm really starting to ramp up on is kind of looking at the history of the e-commerce industry, which has changed a lot, obviously. And the question is it something completely different? Kind of to your question, are we at a moment where this is something completely different, something we've never taken on before? And the hope is, and looking back at history, I'd be curious for your perspective on it, it usually requires that kind of mentality that this is something different to get to meaningful solutions, right? Because if you just think it's the same thing, then you don't actually put in place the solutions that are needed. Because the world is changing, regardless of whether you think it's a step change or not, the world is changing. And we've kind of, especially in the last couple of decades, like from a policy and social perspective, we've struggled to make changes. So, you know, that's the challenge. But again, I'm hopeful that we can, you know, kind of understand that whether this is a step change or not, we need to be changing as a society to make
I
those.
think the most dangerous thing for me, even I say this as a historian, is a nostalgia for the past. I love reading about the past. I would never, ever want to go there. It's a terrifying place. And I think that even if you had one of those good jobs in a factory, you were a union worker, which we know we're excluding many, many people from those kinds of jobs. You're an office worker. These are soul-crushing jobs, doing paperwork all day or working the line. No one is nostalgic for that. People are nostalgic for security. There's nostalgic for family. They're nostalgic for the weekend. And these are things that I think we can do, again, just the way we made the industrial economy work for us, at least for a few decades. For most of the history of the Industrial Revolution, it was a great place to lose an arm. It was a great place to be impoverished and immiserated. So, again, I think it's about how we create policies and organizations that take advantage of this new productivity. And I think, again, I think this is about choice.
And then, you know, again, as a private sector company, like, and you talk about this in your book, like, what can the private sector also be doing to really change itself and to change the model and to, you know, to structure it in a way that can lead to more of these positive solutions? I think that's a conversation that I don't think was happening, you know, when the Industrial Revolution was happening so much, right? It was very much a like top down, like, let's, you know, kind of fix this. And so there's a potential to potentially solve this problem in a different way, which could be really unique.
But there was that in the 1930s. So we hear a lot about FDR.
Right.
We hear less about the Citibank executives that were part about restructuring finance to invest in housing, to invest in rural electrification, to invest in unproven technologies like aerospace that really created millions of jobs. So I think this is why it's so important to have conversations like this that really show that there's the important need for conversation between labor and capital, as they would have put it in the 1930s.
Wonderful.
All right, thank you guys so much for coming, and come drink the wine and eat the food, and thanks again for Usman coming here.
Thank you.
Really good.
Appreciate it.